For me, I think the moment that snapped was Saturday morning tax season. And literally my back snapped. It snapped out of nowhere. And I think maybe there's a psychological component to it. I was doing a friend's tax return and I was doing it for free. And my back I literally went to get out of my seat and my back went snap. So I always say your body will tell you no eventually. So you might as well tell yourself no before your body tells you no, because it's harder to get your body back.
So welcome to the T Construction Podcast. And today we have Suzanne Mariga with us. Welcome, Suzanne.
Hi, Brad. I'm excited to be here with you.
Oh, I'm super excited. So this is something that speaks to everybody, and it doesn't matter your business or focus when it comes to money, profit, right? That's why we're in business. You are, I am, everybody. And so just as a quick intro, Suzanne, CPA, fractional CFO, you're a high net worth tax strategist, author, the list goes on. But I think more importantly, I wanted to kick off here is what is a profit first professional? Because I know you had that book behind you here for those watching on video. And, this is a big part of your brand, the profit first.
Yeah. So Mike Michalowicz and Mike is actually the original author of the book Profit First. And there's several different derivatives of the book that really get more into niches or niches, depending on how your audience wants to call it. And I also have a book that is in that family. It's a little bit different because it's more of, it's for minority businesses, but even if you're not a minority, it's a great book. It's been Kirkus reviewed. It was Publishers Weekly's editor's pick. But it was called Profit First for Minority Business Enterprises. But even if you're not a minority, definitely read it. But really where Profit First comes in a hand is, my journey started, I was like a lot of your audience. I had started a business because I love what I did, right? I was an accountant and I loved like tax strategy. I love making sure that people's accounting books were pristine and clean. Just like your audience, when they're building cabinets, that cabinet has to be perfect when they're done with it, right? It has to be cut to certain dimensions. And I love what I did so much that I would have did it for free. And that's exactly what happened. I was doing it for free. After about 5 years of doing my business, I didn't have much to show for it. I didn't have, I had revenue. We were growing, right? Because when you're the lowest cost provider, right? Because that's what we do when we start a business is we compete against price. We look at what our neighbor is charging and we go, oh, I can knock a few dollars off of that and give you an even better deal. And what happened was even though revenue grew, I had nothing to show for it. I had no profit. I wasn't paying myself a consistent salary. And frankly, I was starting to lose like even my life because, when you're the lowest cost provider, you get customers that are running through your door like a stampede, right? They tell their friends about, oh my gosh, you won't believe about this cheap accountant that I just found. And Profit First was really needed for me because Profit First is all about taking your profit first, making profit intentional, creating an intentional bottom line. And I like it because it works with your natural biological instinct. Brad, the more we have of something, the more we're going to use of it. I think of like that awful restaurant, Golden Corral. It's probably not awful, but like I'm so proud of myself when I go there. So like whenever my son is like, yeah, let's do Golden Corral, I'm like, oh no. But when you go to Golden Corral, you've got the salad buffet, right? You've got the main course, you've got like endless desserts and chocolate fountain. And you never leave proud because all those plates just means more opportunities to fill that. Versus going to an order of dinner when the plates are much smaller, you eat a lot less, right? You've got social pressure. You've got a 5-inch dining plate that only fits like 2 skewers, right? Before you start to look like the glutton in the environment. And so you eat a lot less. You're not as hungry, right? You're just as full as hopefully you're not hungry when you leave this order of event, but you conduct yourself in a different manner. And that's the same way it is with money and businesses. The more money we have, the more we spend. My construction clients, they go, you know what? I think I might need that truck. My accountant told me I can get like a $25,000 deduction. I can get even more if it's above 6,000 pounds, I can maybe get some bonus appreciation on that. Or, maybe I can get this filing cabinets, or maybe everybody in the entire company needs a new computer, right? Because we need some tax write-offs. Or maybe I can grow into that larger office space next door versus when we have less money, my clients are asking me different questions. They're asking me like, "Hey, Suzanne, what employees can I keep? Can you help me predict what my margins might be, in the next 6 months?" Or, gosh, I just don't know if I can continue to do this 401k match. The questions are a whole lot different than when things were plenty. And so what Profit First does is it literally works with that psychological makeup and that biological makeup. And it does it through bank accounts. So you have a bank account where all your money comes in, and then twice a month, that money is transferred to other bank accounts based upon their predetermined purpose. So you've got money going into your profit account, and it's a fixed percentage, right? And Brad, I'm going to give you a link so that your listeners can download what healthy company percentages look like in terms of profit and owner's pay. There's a percentage of your incoming collections going to owner's pay, because at the end of the day, you guys are your MVP. It's not Sally, it's not Sue, it's not George, it's you. If you don't show up to work, sales don't happen, the wheel doesn't continue to crank when you're not there. And so it's important that you pay yourself like you are the MVP. And so part of Profit First is creating an owner's salary. And by the way, your businesses are an asset. When it comes time to sell that business, if you're not paying yourself an owner's pay, no buyer is going to want to buy a job, right? Where they're not going to get paid. So that line is really important. And then because you're successful, you got profit, right? Because you're making all these wonderful transfers, you got owner's pay, you're going to have a tax obligation. Even the best accountant in the world is not going to be able to get rid of the IRS for you. So the best thing we can do is reserve for taxes, create that bank account, have that auto transfer going to the tax, so that in a year, you're not like, okay, how am I going to pay last year's taxes? Do I need to finance it with this year's money? No, you're not having that conversation because you've already put that money aside. And finally, whatever's left over after you fund a profit, owner's pay, and tax, that's going to be for your operating expenses. That's what you're going to use to pay your bills. That's where you're going to make decisions of, can I get that bigger release, right? Can I buy that bigger piece of equipment? Can I hire that expensive office manager or EA, right? And so really you're creating this illusion of scarcity by creating this bank account. And so that's kind of how the Profit First method works. And Brad, I will tell you, it was a life changer once I started implementing that in my business.
Let me ask you about that, because I think there's a lot of points. I was taking notes just on a few things that you brought up, but one of the interesting comments is, because you love what you do, which you can see that passion at. I've heard the comment that if you love what you do, you've never worked a day in your life, right? But even if you love what you do, as you mentioned, you shouldn't do it for free or break even. You have to be thinking with this mentality. So you're setting up your business for success or transition or whatever that exit strategy may be down the road, right? For you, when you're talking about profit first, just the psychology and changing, flipping that switch, changing that methodology, how did that change how you looked at your business? How did that change as your clients, how they focus on their business by putting profit first?
So the same thing that happens with me happens to my clients. Suddenly they go, okay, if I only have this amount left, right? If I only have this amount that's in my operating expenses, I need to pick wisely how I'm going to spend this money, right? And suddenly they're going to go through that bank statement, or they're going to go through that profit and loss statement. They're going to go, what are the things that I really need to keep my business going, right? What really keeps the lights on at the end of the day? And keeps us moving towards our end goal. And so a lot of that fluff stuff, I remember during COVID, I was paying like my office rent, and I would go in randomly on a Saturday because nobody was there. And I would see these beautiful magazines just stacked up, like Bloomberg and all these wonderful business magazines. And I was like, look, their binding hasn't even been cracked. Nobody's been in this office to even read these magazines. What a waste of money. And immediately I was able to cut those expenses, right? Because they added no value. Nobody was reading them because nobody was traveling during that time to go see their accountant. Looking at those memberships, what are memberships that I'm paying for that are auto renewal that I haven't been in a meeting with for like 3 months? Those are some things that I can easily cut, right? Starting to do competitive bid, just like your competitive bid, if you're in trades, right? Your government is looking at you like, are you the lowest cost provider? Start to look at your own vendors. Are they the best value? Are they offering me the best value? Or has inflation and those annual increases, how that has that benefited them without benefiting me? Maybe there are others that are out there that might be a lower cost. So it really, really started cranking those wheels of, how do we get more efficient? How do we do more with less? And really what's important.
Yeah, I love that. And really, when you break it down that way, it makes I think a lot of sense for anyone listening, because if you're paying yourself first, um there's going to be a reserve, right? And it's going to be a defined amount, whatever that is. But essentially, now you're going to have to put this in buckets, whether it be marketing, as you mentioned, it could be company culture, team building things. It could be, as you mentioned, like in print media. It could be, vendors. Are they giving us good value? I mean, there's memberships. I mean, there's so many things this breaks down. And so, really, as a business owner, if you're trying to hit that number, and this is where it's really important. You said something early on, I think is really important for the listeners. You said owners must pay themselves to sell their business at some point, because the reason being is that if you can show that there's value in the brand and in the company and that you're making a good living, someone that's going to buy that and operate it, they can see that they can essentially have that because you've already planned for it and you're already doing that.
Exactly. We just sold a large portion of our business. We, for many years, had that traditional accounting and tax practice. And when we cranked out like your thousands of tax returns every year and your financial statements, and we recently sold it. And one of the things that our buyer looked at was, not only how profitable are you, but what is your owner's pay? Because when businesses sell, they go for not just a percentage of revenue, right? They go for a multiple of EBITDA, which is your earnings before income taxes, depreciation, and amortization. They're looking for the cash. Like, what is the cash at the end of the day that I'm going to be receiving for this business? And so it's important that not only do you have the millions and zillions in sales, right, but you got to have the profit to support it that's in line with that revenue.
Yeah, I'm glad you brought that up, the EBITDA, because that multiplier is really where the benefit comes in for people selling their business. I think to it for anyone that's done any development in commercial real estate, they look at cap rate, right? And cap rate's that multiplier that's going to accelerate, the proceeds, of the development, depending on quality of the vendors, quality of the tenants, quality of the location in the community, right? This all goes into commercial real estate. Very similar to your business, they're going to be looking at these couple, these few items on your balance sheet and how your company's operated from a profit standpoint. But you said something earlier as well. You said, a lot of us, the more we make, the more we spend. So we may be working and okay, having more revenue, more people, but does that really mean to have more profit? And if you're looking at profit first, that's going to really evaluate, as you mentioned, purchasing equipment and really the longevity of the company and how we're positioning ourselves for future, just growth or possible sale in the future.
Exactly. Exactly. Too many people, they focus on the tax man and they don't realize that in a day it's cutting their ankles, right? It's costing them other opportunities.
Well, it's funny you say the tax man because I think the analogy a lot of us have seen. I know there's an episode in Seinfeld and Schitt's Creek, and they're talking about the write off, right? Like, and they're like, "Well, who writes it off?" And there's that standing joke. So anyone listening, and to your point, there, some people are looking at this as, "Hey, maybe I'll purchase this suite at the professional, at one of the sporting events, right? Because I can take clients and maybe there's a benefit to that, right? But a lot of us, maybe they're purchasing a vehicle, but some of this is for depreciation. So they're looking at this as just a year to year tax where they're purchasing more things or doing more just to kind of net zero possibly as much as they can on taxes, as opposed to maybe looking at profit first. And there's other strategies they could take, and implement in their company.
And it's interesting because, a lot of times when people come to us, they're used to that mentality of, I'm going to cut my ankles so I can cut the IRS tax bill. And it's interesting because, as a profit first professional and tax accountant, I will never tell you increase your expenses, right? In order to get a write off, right? That's just kind of like, oh my gosh, so you're gonna pay a dollar just to save 37 cents on something you don't need. But instead what we're going to do is we're going to look at what is your long-term goals? What is the thing at the end of the day that is going to bring joy for you in your business? And a lot of my clients and a lot of entrepreneurs one day is I want to get out of my business, right? I want to get out of my business. I want to lock the door one day, hand a key to somebody else and live my life, right? Travel to all these great places all across the ocean, right? And I said, okay, well, if that's important to you, maybe we need to look at some retirement accounts. But I'm not talking about those rinky dinky $6,000 a year IRA accounts. You can do a whole lot better than that. I'm talking about depending on if you're closely held, meaning that it's a family owned business versus multiple employees, right? Or hundreds of employees, your strategy is obviously going to be really different. But maybe one of the things that we can implement for you is a 401k. And I'm not talking about like a safe harbor 401k. I'm talking about a 401k where it works for you. Like a lot of entrepreneurs, one of the things that's important is, I want my employees to be with me for a long time, right? Especially if they're A players, because when they're with me for a long time, they get better at their job, right? I don't have to do another video to show them how to do something. They start to bring their ideas to the table. They start to get more efficient. And so I want longevity, because the longer they're with me and the better they are, the more profits I'm going to have, right? The more gross margins I'm going to have, the more profits I'm going to have. And so one of the things that I might do is say, okay, well, let's have a vesting period, right? You got to be with me for 6 years before you fully vest. If you leave me for 2 years, go down to my competition. And so sad, that I'm losing you, but guess what? You're going to forfeit those 401k contributions I gave you too. Yeah, I know I got a tax deduction all this time, but I'm keeping that in my coffers, right? And so if I'm the last one standing and you forfeited your contributions all this time and I've gotten nice tax write-offs, that means that when I retire, those contributions, they're going to go towards me, right? Which is really, really good. So I'm rewarding those that stay, right? To help the company on its mission, but I'm also helping myself too. It's a win-win situation in the long run, whether you stay or you leave. If I'm a closely held company, maybe I might do a pension plan in there, right? A cash balance plan. Maybe I'm going to be able to write off maybe a couple $100,000 a year, right? And put it, depending on how old I am, right? I can put away more of that, especially if I'm a highly profitable type of business. I've implemented profit first, and you guys are going to see some of those percentages there based upon your river. They're pretty high. Again, that might be something that I do, is implement a pension plan for that. I might hire my kids, right? My kids, they're getting some genetics from you. They're getting some of that brain power, right? Why not give them some job experience too? They say it takes 10 years to become an expert at something, right? And so why not start them at 14 working for mom and dad? They're learning some good business skills. Maybe they're learning some bookkeeping. Maybe they're learning some customer service skills. Maybe they're learning the art of construction, right? And not only that, but if I pay them less than a standard deduction, well, guess what? Depending on how I am formed as a legal entity, that might be tax-free income from my child, right? And not just tax-free income from my child, but that's a write-off from my business too, because I just got payroll expense, right?
Mm.
And so now little George, right, he can pay for his own sports, right? Or little Michelle can pay for her own dance lessons that have all those expensive costumes every year. Meanwhile, mom and dad has got a write-off. And by the way, can you take me to Disney World too? Mom and dad enjoy Disney World just as much as the child does, but now the child can afford it, right? So you're giving them amazing job experience that's going to allow them to succeed even more in life, but also create income that's not taxable. And now also another thing they can do is put it in their Roth IRA. That's an after-tax vehicle for them. And putting in the Roth means that even though they paid 0% tax, right? It's now in this Roth IRA. So it's going to continue to grow tax-free, so they can pay for their own college, buy their own home, or even when they retire themselves.
Yeah, I love that. I think that's something that's really important as you think about like the Roth IRA, especially hiring one of your children at 14, and not only the communication and the realistic skills that they need to go into this world, right? Because we know that in school, unfortunately, we're not learning accounting and finance and investment and all these things. I mean, there's courses that touch on it, but I know from my scholastic career, there wasn't a lot of time spent on that. You have to figure this out in the world for someone with your expertise, Suzanne, especially offering, being a CPA, fractional CFO for companies, how often should a company be meeting with their CPA, with their CFO to really strategize on, throughout the year based on profit first, based on other, tax strategies that are out there? Is there a recommendation that you have or that you're working with your clients?
So, first of all, I'll start with the biggest mistake that you can make. The biggest mistake that you can make is having a tax professional that you're meeting with once a year. When someone comes to me and it's January, I'm like, it's great to meet you, but these are all the things you could have did last year, but look at all the money you lost. So that's the first thing, is you don't want a once a year relationship with your tax professional. We work with some of the larger businesses, so we meet a couple times a month. And the reason why is we want to course correct, and we can course correct early. We can predict what the tax liability is. We can implement new strategy, right? If it's a twice a month relationship. But I would say at least quarterly, you want to be meeting with your accountant. Hey, what do you see that I don't see? Because you went to school or you're in that profession because you're good at it. And why not bring someone else in that's good at what they do, that's going to compound your results even more?
Yeah, that's really valuable. And the reason being is the more I've spoken with professionals such as yourself, Suzanne, it's funny how you start to pick up on all these different avenues that are out there, right? And the reality is there's a purpose to them. You mentioned, hiring your children at 14, that's a huge one. Um, having board meetings at your home, right? And you can write off certain aspects of your overhead, having a home office. I mean, but the course correction I think is really valuable because too many of us, are busy day to day and as we get down the track, there's things we're missing or overlooking and not paying attention to that you could come in right away and say, "Why aren't you thinking about this? Why aren't you doing this?" And case in point, um, going back to the owner side, if you're looking at exit strategy at some point, but even if you're not, if you're looking at tax rate, you know, correct me if I'm wrong, but most people say someone that's an owner of their business, you have to make sure that you're paid a salary adequate to your job title or adequate to what you're performing. We understand that. But what you don't want to do is just say, I'm going to pay myself a salary of 300K. Maybe that salary is 150K and you're paying distributions because that helps with tax. And so kind of walk through, just that mentality as well.
Right. And so, it's definitely a new level, new devil, right? Everybody is going to be different. Because you're right, and I think what you're talking about is like S corporations, and once you hit that Social Security, Medicare max, or
Right.
not Medicare, but Social Security max, does the S corp really benefit you? And that's where having that great relationship with your accountant is important. Because there is a balancing act with it. At some point, the S corp does not benefit potentially as much as when you're at that lower level. I know one of the things that we do is a reasonable comp study. So, and what that is we're looking at how many hours are you actually spending on the job? What would you pay if you hired somebody else to take on those same responsibilities? And again, if you're audited, they're going to want to look, is your compensation reasonable, right? Or was it a scheme to avoid Social Security, Medicare tax? And so having those studies done, that reasonable comp study is extremely important with that from that standpoint. So it's always a balancing act, new level, new devil. I think for the construction industry, again, when you're running a smaller construction company, it's very different than as you scale and you get into a 25 million, $50 million construction company or government contracting. Percentage completion, job costing become extremely important. Having financial statements that you can get a surety bond, right, becomes extremely important. And so, you know, being able to, your needs are going to change. Like I said, I'm meeting with my clients twice a month and we're course correcting. We're making sure the GL is feeding and calculating margins and job costing exactly correct. We're actually walking the location, making sure that procedures are being done correctly. And so again, it's new level, new devil, depending on where you're at, having that relationship that makes sense.
So speak about the fractional CFO. I know that's part of your title, and walk through for anyone that hasn't heard that term or doesn't know what it is, essentially what that entails.
So a fractional CFO is it does very similar to what a CFO does, but it's for companies that traditionally aren't ready yet to step into that role. Because normally, when you're stepping into a true CFO role, you're hiring your full time CFO. It's usually around 25 million, 50 million in that gap. And so really what a fractional CFO is, it comes in and it gives you that expertise. Like my background was, after I think I told you, Brad, I started working for my dad when I was 14, right? He hired me. I was an amazing tax write-off. He had 5 kids. Imagine the tax write-off that man was getting. And when I graduated from Ohio State, I went to work for Anderson in Chicago. And so I worked with like your Komatsu, your Goldman Sachs, your really
Mhm.
large companies, and then KPMG. So you're getting like SEC experience, Big Four level experience accountant. Usually when you're hiring that, so you're bringing that into a smaller company to get it ready to scale or to scale even further efficiently. So definitely making sure that when you bring in that CFO position, whether it's full time or fractional, right, that they have that competency to help you bring to that level, not just Joe Bob, your cousin down the street who graduated with an accounting degree. You want to make sure they have that background behind them.
Yeah, that's really impressive because, from the fractional CFO, the benefit and I'll give some relation to me. So, our company, based on where we're at, right, as a company, I have the option that I can say, okay, I can hire a CFO that's full time, that's essentially working with us and our entity, but understanding that that salary is typically going to be a 6-figure salary, right? Especially to get someone that's really experienced, you're going to be paying a good salary, full time position. So, am I
Multi
producing them?
six, Brad, multi six.
I exactly, exactly, and so it's not inexpensive position, right? Especially, paying for that. And so you have to make sure that the volume and operation, is substantial that you can afford to cover that because it's strictly overhead. Even, for, job costing, a lot of most projects you can't job cost a CFO or, some of that general overhead because that's considered overhead. Whereas a fractional CFO, essentially, you're getting the benefit of that, but they're not full time. They're part time, so that you could have your standard bookkeeping or accounting, in house that you're doing a lot of the month to month, the daily ins and outs, APAR. But then you're hiring a fractional CFO that's going to come in and now do the consulting on, I don't want to say limited basis, but from a cost perspective, it's a little bit more feasible. So you still get the same benefit. It's just you're not having to absorb that entire salary.
Exactly, and I'm gonna even, put it out here too. Every one of your employees should be producing a profit, whether it's giving you more time or bottom line, including your CFO and fractional CFO. I know if our clients, we are implementing profit first in their operations too as they go and helping them go, what should they cut? What should they add? What how do we price this? What is break even? And then how do we target the right profitability that we're trying to get at through our pricing? And so that CFO should be giving you a 4x on their costs.
Yeah, that is a really interesting point that I've never had any guests come on and say is that they said, because it makes a lot of sense when you have a fractional CFO coming in, the value proposition is there, right? You're spending whatever that cost is, but you're getting huge bang for the buck. But you said everyone on your team, every employee should be bringing you more time or bringing profit into the company. And that, they could look different because time, a lot of us may value time as a business owner, right? That we may want that time. Some of us may be looking at profit first, as you're mentioning. As a business owner, we should understand kind of direction of the company. And then how do we achieve that through hiring, training, company culture? And as you mentioned, if someone can take a lot of this off of your plate, why aren't you hiring that out anyways?
Exactly. So you could make more revenue, right? Which brings in hopefully more profit, right? So every employee should bring profit. I know one of the things that we like to see is at least a 4x on every employee. So we like to see an employee bring in at least $150,000 per employee in most industries.
So how when you look at all industries, and this does not have to be specific to construction or interior design, when you look at all industries, how do you create that value or chart or metric to really figure out if that employee is bringing revenue to the company?
Right. And that's where it really, it's going to be company by company and really evaluating that organization chart. What is this person doing? Is this job really needed? Can you consolidate a job? Maybe we can do more with less people, right? Maybe we can outsource it and give it to somebody else who it's more in line with what they're wanting to do or more efficient at what they're doing. So it's a position by position. It's more of a surgical type of thing versus a take a big old axe and hacks.
Yeah, it's tough to come in and just, throw that axe around. But when you're looking at a company, and you mentioned the org chart, when you're coming in and you're evaluating one of your clients, are you looking at, job descriptions? Are you looking at hours they're putting in? To some aspect, you'd have to figure out, productivity, how they're doing. What are some of the different things that, if I'm a business owner thinking, okay, I'm ready to bring in Suzanne, and she's going to come in and help us really, you know, get down to the nitty gritty of our company. But in preparation for that, what should I be doing? Should I be understanding essentially what my team's working on, where we have overlap, where we have double work? What are things that I should be focusing on or that you're looking at with that business owner?
So the first thing I'm doing is I'm looking at who's there. And there's a difference between those that are doing direct labor versus those that are overhead. Direct labor, it's easier because you can look at that you can assign cost per job, especially in construction, right? Your timesheet, what job are you working on, and what percentage of your payroll is going to that job versus admin time or non-billable time, and that becomes part of your analysis for job costing to figure out gross margins per job. So that's a little bit easier. When you're looking at the more overhead type of labor position, like for example, when I'm looking at my office manager type of position, I'm like, how's she doing on collections? If I didn't have her, how many bills, how many invoices would I still have in that 30-day, 60-day, 90-day bucket? She is definitely a profit center, right? Because she's going to make that call every single day. Did you pay it yet? Did you pay it yet? I don't got it yet. Do I need to come drive over there? And I call that a profit center. Some people might call it overhead or expense, but I'm like, I didn't have her, I would have a big bucket of 90-day overhead, right? And so it really is looking at what is the particular value and how are they increasing the revenue of the business or adding to the overall profits.
Yeah, and that completely breaks down that way. When you look at like AR, right, who essentially would be your office manager, whoever's collecting, and I can tell you that from a customer standpoint, it's interesting, in the medical field, like any of us that have gone into the maybe dentist or kids orthodontist, or there are some offices where I mean they are on you for the minute check in. I need payment. Here's the guesstimated, write off for insurance, and they're on it. They're collecting. And some are like, oh yeah, we'll bill you when we see it. And I can only imagine just as a business owner, the difference of financials of what those companies look like. The ones that have someone that's really understanding where this is, they're collecting and they're not letting things linger, and it's just information in, information out.
Right, and you have to have the right personality for that position, right? Someone that's not gonna be aggressive and
Turn off all your
and and
customers.
exactly, be friendly as they pester you, right? They're not gonna be successful on that job. So there's a lot that goes into that and making sure you have that right fit, just like you said, Brad.
So I know you speak about, how do the top 1% max their profits, secrets that people, what are just maybe a couple cliffhangers there, a couple little, items that those that are really successful businesses that you've been around, especially early in your career, you mentioned you work, for the big four, tremendous experience. And I'm sure you had a ton of exposure, as you mentioned, with Komatsu and Goldman Sachs. What are just some things that they do or an understanding that they have to be so efficient and effective in their business?
So I think the top 1%, what makes them really different is the intentionality in everything. It's, the intentional profitability, intentional, what expenses are generating ROI, right? Um, how much unbillable time do we have, right? Who's in production that isn't really producing and really being on top of that. I think one of the things that's important, Brad, like you mentioned earlier, much earlier in our talk was the culture too, having that culture of, versus you've gone into organizations where it's like sloths are working at the desk, right? Nobody is moving, something broke and nobody's getting up to fix it. You want to create that culture that something's broke, everybody's getting up to fix it, right? Everybody's, we just cannot tolerate something being broken. You want that type of personality. I know a lot of people will personality test people, with your DISC or Colbier to make sure they're bringing in that right fit for their organization. I've seen people that actually you're probably not they call it cognitive testing, IQ testing, right?
Mhm.
Making sure that they're bringing on problem solvers, maybe giving people real problems to fix before they even bring them on full time, testing them, making sure that they are actually very good at their job, instead of like I know a lot of times we're in the culture now of building people and hoping that they like the job that they're being built into. Maybe hiring people that actually have an intrinsic interest in that work, that maybe went to trade school or trying to get in trade school so they can learn this, right? That have that interest, right? So it's building that intentional culture. And that is the beginning of creating that profitability. It all comes down to intentionality.
I love breaking apart the intentionality. And the reason, as you were talking about how intentional they are, just looking at ROI. And I was thinking about how that relates to me as a company. So I'm in construction, right? And so for a company such as myself, if I had a great CPA, I'm not saying don't, I'm just saying, working with you, Suzanne, on the other side, you say, okay, Brad, well, you could look at your remodel division, at your new home residential construction. You could look at commercial, you could look at development, spec homes. Here's all these different, pots that you're working in. Well, are you making money in this one? Are you losing money? What's the benefit? And the reason I bring that up, I remember, Nike, when they shut down Nike Golf, right? They were still making, what was it, 400 million a year. But for them, they're looking at, we can make way more in these other divisions. Why are we wasting our time here if they're not, the ROI? You and I may think that's a lot, but we're not understanding the overhead and everything that goes into running that operation. So essentially, when you say intentional, it's really, what do you do well? Is there a good ROI? And why are we not focusing on that and making this your bread and butter?
Exactly. So that Pareto principle really comes into play. Pareto is that 80-20 rule, right? Where, you know, it was someone in Italy that they were doing a study in Italy and they noticed that 20% of the population owned like 80% of the wealth. And they said, what happens if we extrapolate that concept? Like go to your closet. I look at my closet. I'm like, yeah, I got 20% of my clothes that I wear like every single day. And like 80% that just is like hogging up all the coat hangers, right? And so, and that happens, and even in our businesses, there's 20% of our clients, right, that are occupying 80% of our resources, our time, our staff's time, fixing things, right, doing things over and over and over again. And why not focus on the 20% of clients that are actually creating that 80% bottom line? Just like you said, is looking at those divisions that really is where we need to focus. Maybe instead of doing concrete, right? Maybe look at dirt, right? Dirt's more profitable than concrete. So maybe it doesn't require as much equipment, can't mess it up as much. Let's just do some dirt.
It's funny that 80/20, how applicable that is to everything in life, right? I mean, you think even your employees, I'm sure most people relate that. And I've heard like a 10/80/10 rule where, as well, what's this kind of similar with the 80/20, the 10/80/10 with when it comes to employees is you have 10% that are superstars. Like the company culture, not a huge deal. They don't have to have meetings. They don't have to have trainings. I mean, they're going to go off and they're going to perform at a high level. 80% of them are great. They're kind of, they need that validation at times. They need that training. They need that camaraderie. They need that culture. They kind of just need that, right? To keep them going, keep them energized. And then there's 10% that take all your time, right? It's just all the stress level. Clients can be that way. You mentioned clients can be 20% taking all your time and 80% are going good. And so how do you move that? How do you vet clients? How are you figuring out? So in addition to the ROI, really what you're speaking to is as a company, when you're intentional, it's not just what division am I most profitable? What division makes the most sense? But also have to be looking at why are these clients taking 20%, these 20% clients taking all my time? Am I not setting correct expectations? Do I not have the right systems? And so intentional is not just an ROI, but you're looking at systems, culture, organization, training, sales. I mean, all these different little funnels that come into the whole aspect of it.
Right. And processes too, right? For example, change orders, right? That happens in construction. And, I think one of the things that especially for artisans, they're like, "Yeah, I can do that. Yeah, I can change that out, or I can make that change for you." And it never goes through the paper, right? It's just something that I end up doing as a favor. And imagine the favors you do, and then and as you grow, the favors that your team is doing too, right? And so when having processes that says, "Hey, if we don't make a change order, if we don't make this request official, somebody's going to pay for this." And it's probably not going to be the client if I'm doing favors, right? It's going to be somebody that's going to be working extra overtime, right? So the company's going to be paying for that. And so it's important to stress in that culture that we document change orders. You have a special request, we are more than happy to accommodate, but we're going to have a change order.
Yeah, that's really important. So when you think about, and you mentioned this essentially previous in the conversation, you were speaking about, as a company, you should really be thinking about profit first because it helps you strategize. What do I need? What do I need to prepare for? If do I need to hire somebody? Do I have the funds to do so? Or can I allocate those costs, to a job, job cost it. But when you're thinking about recession, it, some companies are dealing with that right now. For me in construction, we dealt with a big one in 2008, nine, right? All of us know how that went. How does a company make themselves recession proof?
So I think the biggest thing that a company can do, especially now in a world where we don't know what's coming around the corner, right? We don't know, we just got out of COVID. I think none of us ever expected the end of world order, which was starting right because of COVID. I think the big thing is to be flexible, right? Be really flexible, and what that means is avoiding long-term fixed obligations. And, yeah, that Xerox machine looks amazing, but do you need to sign a 5-year contract for a Xerox machine? Or your lease? Do I nearly need to do a 5-year lease? I'm not doing a build out, right? Do I need to do a 5-year lease? Maybe the world is moving towards virtual right now, right? Or maybe I can get like a small plot or a small trailer that we can all meet at. And so really honing on, I want to stay flexible. I want to stay nimble right now in order to adjust to whatever happens in this economy. The other thing is having a cash management system that allows you to flux, right? We talked about profit first. It's based upon how much you're collecting, right? How much you're collecting is how much you have available to spend. And that natural bank account whether it's plenty or less, right? That's going to affect how you're going to spend. And if you're a bigger company out there, not just having that cash management system in place, but having a budget, but not just say once a year, I just did this in January, cha-ching, cha-ching, I'm celebrating. No, let's visit this budget monthly, right? Let's see if are we staying within budget to actual, what's our gross margin percent? If I'm aiming for 33%, in terms of like my cost of construction, right? Then if it's starting to go above, I know that inflation's happening. I need to adjust my pricing. I can't follow the same pricing I did 3 months ago, right? I think we saw that a lot in COVID. And so really creating that ability to fluctuate and really staying on top of your numbers is really important with that.
Yeah, the cash management system, I think that's a really important aspect you brought up. So break that down. I know part of that is the profit first, but when you're speaking about cash management system to break it down for someone who may not understand really what that means, how would you explain that?
So, with cash management, so the way that we talk about profit first, the way that works is looking at, as Mike calls it, that bank account balancing, right? That bank account accounting, where you're looking, most business owners, they'll if you ask them, they'll confess, I look at my bank account every single day. If somebody comes up to me and they're like, "Hey, can we go ahead and buy a new computer?" I'm gonna check my bank account, right? Make sure the money's there. Because if they're outsourcing their accounting, they may not have the real numbers for like another month after month closes, right? So they're looking at that bank account accounting. And so really looking at, your accounting and also projections. We do projections. This is what we're estimating our revenue is going to be. And do we have the expenses or do we have the budget expenses that are within that line of revenue? For example, in construction, you may have a slow season, right? Depending on the type of work that you're doing. Summer may be your busy season, or it may be your slower season, depending on what you're doing. And so being able to forecast your expenses, right? Because unfortunately, expenses are the hardest thing sometimes to get out of, and just forecasting that budget, because in that high season, I don't want to go and spend all my money, right? I want to I maybe I need to put away some of that cash in my operating expense to be able to cover the slower seasons.
It's really important, as you start thinking about projections and budgets. And, there's a builder, CRC Builders, and they're in Napa, California. And what's interesting is he's in a market where it's very common hard bid, right? He's competitively bidding projects. Some areas of the country, especially lately, a lot of it's negotiated, but not in his market. And he has a good metric where he says, look, I know that as an example, this isn't his, but I'll just give an example. If he's closing 75% of his hard bids, losing 25, closing 75, he knows that his nut to crack, like he needs to be ideally making 30, generating 30 million a year of work. Well, that means if he's bidding 10 million a quarter at 75%, he's closing 7.5 million. So if he's bidding 10 million every quarter, he knows that he's going to hit that 30 million mark, right? And essentially that's how he's breaking it down. How important is it for business owners, whether it be estimating and job leads and backlog? And, as you're looking at projections for the year and sales and overhead and budgets, marketing budgets, and as you mentioned, new computers and Xerox machines and trucks. I mean, just how important it is to set budgets, understand your projections, understand, you know, essentially where the company's going. And then now you can really have a good map of what you're building for the year.
I think it's extremely important, right? And even for smaller businesses, if you want to scale, this is something that you definitely want to have in place. But I think the more important part too is that you're not married to this budget, right? Things can happen, things can change. And it's looking at it as a living, breathing document and being okay with that. That it can be a living and breathing document that can be adjusted. If we knocked it out of the ballpark and had an amazing month or amazing quarter, right? That I can adjust my budget, maybe put a little bit more spend in marketing, right? So that I can have even more growth, or put it in reserve and invest it in other things, right? So that when that cash becomes of need, I have it there, or to do a bigger spend or buy a building, it might be there. But if we see a slowdown, also being able to adjust our expenses too, right? With that, it's important. So definitely having projections, but also knowing that you're okay to things changing.
Yeah. But again, the reality is, to your point, Suzanne, is that if you have projections, if you have budgets, if you're planning for it, you can pivot, you can move, recession happens, or plans change, or you want to increase a budget. You at least have done the due diligence and research and you're prepared to do it. And it's a lot easier to adapt and move as opposed to just scrambling because you're not really sure where you're at.
Exactly, exactly.
So let me ask you this. Early on, you mentioned, especially for you personally, you said, when it's easy for me because I love what I do, that I was, essentially breaking even, or, you know, doing things, at a lower price, to get the job. How do people at any level, any business, fight that mentality to say, to understand their value, to charge what they're worth, not lower the price to get a job? And I will say, it doesn't matter how seasoned you are. I know, because of relationships you may have, or myself, someone may come in, oh, because you're a friend, I'm gonna give you a discount or do a little, it's hard to stay away from that. So, any advice you have for someone to just not lower their pricing?
Yeah, and even friends come to you expecting a discount too, which is
They
even
do
worse.
expect it. Yeah.
I expect it to be free. I want a free home built for me. But, I think it's for me, it was just getting tired of entrepreneur poverty, realizing that I was on a hamster wheel, that things weren't getting better. I think a lot of times we're taught that, okay, it's going to change. It's going to change when the more money you make, if you get more revenue, things are going to change. But the reality is, if you bring bad habits at a 500,000 to a million, you're going to get the same results, right? You're going to get the same results, but you're going to have even bigger losses, right? Because now you're dealing with extra zeros. And so it's important that realize, hey, what do I really want? What makes me happy? Just like the tax strategy. What makes me happy at the end of the day? What's gonna make, when I'm like the 50-year-old Suzanne or 60-year-old Suzanne, how do you spell happy, right? And then working backwards to get that. And everything needs to be in line with that ultimate goal.
It's really important to think about because, it's really hard to do that. Like, I think all of us have dealt with that. And, part of it, you start a company, or, you start your company, you're trying to build, a Rolodex. I think a lot of people probably want to understand that term, as that's changed, but you're trying to build a portfolio and, clients and reputation. And so there is some, yeah, I'm going to build my business, and there are maybe some exceptions I'll make, but essentially you should be understanding the goal and where you want to go as a company, and really try not to deviate that. I know feedback I had from my leadership team is that they're like, Brad, there's so many different, projects, and they all have different agreements, and they all have different, you know, why can't we be more consistent? And I think that's really important, because it's not just for the bottom line, but also the mentality of the team, right? As they're looking at, and also their livelihood, to make it a little bit easier as they're coming to work, to understand that if there's a lot more consistency, or which job am I doing here and which job, and then does it have a different term, and then how do I adjust that? And so it can create complexity too.
Definitely. Favors don't do anybody any good but the person that's doing it. And I'm not sure if it does them any good either, because, do they really get the quality of work that they really want if they're trying to get that price so low? Does it really help them? And one thing that worked for me in my firm was, um, I used to start at having one of our admins. If a friend called and wanted Suzanne to do her tax return, instead of talking to me, they would have to talk to a different person. They would have to talk to a salesperson, or they would have to talk to an admin person. And it was just, that person said, this is just the rules, this is the pricing structure, this is what it is, because sometimes saying no isn't our gift, right? And so if that's something that you struggle with, having somebody else on your team take care of that part.
So I would imagine, especially you as an entrepreneur, Suzanne, how difficult was that to have someone, or most entrepreneurs, do you find that that's probably one of the most personal aspects, is the sales process, the connection process, the, setting those expectations? How hard is that for business owners and entrepreneurs to let go and have someone else handle that aspect?
I think it depends on the personality. My DISC, I don't know if anybody's familiar with DISC, but it's a personality test. It's high C, high I. And so very detail oriented, but very people person too. And that people person goes, yeah, we can do that. Yeah, yeah, yeah. Yeah, we can do it for free. And so, for me, I think the moment that snap was Saturday morning tax season. And literally my back snapped. It snapped out of nowhere, and it snapped. And I think maybe there's a psychological component to it. I was doing a friend's tax return, and I was doing it for free. And my back I literally went to get out of my seat, and my back went snap. So I always say your body will tell you no
Yeah.
eventually. So you might as well tell yourself no before your body tells you no, because it's harder to get your body back.
It's funny you say that, because my wife, she's, I tend to be like, people person, and, you want to do everything you can for everybody to some extent. And sometimes my wife's like, you need to be careful of your health. I went through a little health experience last month in June, and it's just one of those things that sometimes your body's like, you need to kind of position yourself. And it may not even be stress related, but sometimes we tend to take on too much. And you said an interesting term I've never heard of, which is entrepreneur poverty. And what you don't want is, you don't want that balance to be so off that you're working hard as an entrepreneur, because entrepreneur life is really hard. It's very stressful. There's a lot of ups and downs that you want to make sure that at least there's compensation, whether it's time or money or whatever that is, right? That's important to you to offset that.
A friend told me this once, and it wasn't in terms of entrepreneurship, but it really hit home for me. And what she told me was, no good deed goes unpunished.
Yeah. I have an employee that says that all the time. And there's some truth there. And it seems that every time no good deed goes unpunished. It's sad too, because we all want to do good deeds, right?
Exactly, but it's going to cost you.
Yeah. So as an entrepreneurship, and I appreciate the time you made, Suzanne. Hardest part of entrepreneurship, right? What keeps you up at night?
What keeps me up at night? Oh gosh. Not much now, Brad. I mean,
Hmm.
not much now. I can tell you what kept me up at night 10 years ago.
Sure. What kept you up 10 years ago? I mean, it just shows that you've created a business and a lifestyle that's, fully functioning. And that's why you're an expert. So that's amazing to hear that there's light at the end of the tunnel, right, for most entrepreneurs. But in that journey 10 years ago, as you're building to what you have now, what was that like?
So I would say 10 years ago, right before everything snapped, it was, really it was a cross of everything. It was, how do we stress less about labor, right? And bring in good labor when you don't have the profit to do that. That was the big struggle 10 years ago. And the reality was, and this is where it snapped for me, was because you can't bring in A players if you're not charging the right price.
Yeah, you can't. And if you're not charging the right price, then you can't have the right people. And if you don't have the right people, you can't train them. You can't, push, give them more on their plate. And really the brand. I'm really glad you touched on that, Suzanne, because I think there's been a lot of maturity in my network and people that I network with. I can say myself and my company that there is value to hiring really good people, very talented people. There's a cost with that, and that's okay. Um, but it's amazing that when you have good people and you empower them, there may be some nerves there because you're like, how can I afford them or how can I get there? But a lot of them bring so much to the table that now your company's positioned for growth. And I was just thinking about this recently and having a conversation that if you want to get your company to the next level, if you really want to be that next level, you got to have the right people behind it, because that's what that's the differentiator between the good and the great.
As you scale, it makes your job a whole lot easier when you don't have people that you have to spoon feed. It makes a big difference. So the better people that you have, the smoother your growth will be, and
Well,
the more
you're
you'll sleep at night,
Yeah,
right?
well, you're a case study. So here's Suzanne that she doesn't have anything to stress about. So that's incredible.
And Suzanne personality tests them. She tests them on cognitive. She gives them test broken balance sheets and tell them to fix it. You don't get into the door unless you're an A player.
Yeah, I love that. So what do you do for fun?
So what do I do for fun? I love traveling. Oh my gosh, I love traveling. I think last year I went to Mexico twice. I
I
really
know for
wanted to
your
go
birthday,
overseas.
if I interrupted you for your birthday, I did think you did London and Paris. I saw a little video you did about that at the airport,
Oh
which is pretty
yeah,
cool.
that was one. And I really wanted to go back this year, but I was like, oh man, with pending war, I'm a little nervous about that. But yeah, hopefully I'll get to South Africa sometime either this summer or by winter. But I just love going places.
Oh, that's amazing. I love travel. How does travel inspire you?
It's just being in a new environment, seeing how people do things differently and just learning, and also I think sometimes depending on where you go, you see how efficient they are and how much you really don't need to get things done.
It is interesting. It's funny how, as you travel, and I was fortunate to live outside the country. I lived in Argentina for a couple of years, and I've been to Europe a few times, and there's definitely a healthy pace in other parts of the world that I think we can apply here in the US that, a lot of us work hard, but I think there's some value in understanding, just other things that are important in other cultures and how we can apply those to us and really bring that back, not just to our lifestyle, but also our family and our company culture. I mean, there's just a lot of value as we get to know other people and how they live that's different than us.
Definitely. A lot this is a great country, but there's a lot to learn elsewhere too.
Yeah, there is. So for those listening, Suzanne, you've been incredible. I can't thank you enough for making so much time for us today. Where can our listeners find you and reach out to you?
So the best way to find me would be to, one, grab that target allocation percentage, find out what your ideal profit is for your company, depending on where you're at, because every company has a different percentage of profit, right? What a reasonable owner's comp should be. Take a look at that. Would be to go to the link that I am going to give you, Brad. For that, we'll give that to you or marigagroup.com, and that's marigagroup.com.
Well, you've been incredible, Suzanne. So thank you for making time today for a podcast.
Thanks for having me.
If you get value from the show, please support us by giving a 5-star rating and review on whatever platform you listen to. And I also have a favor to ask. We've had some incredible guests that come on and share their wisdom, their knowledge about their business. So if you have friends or family members that could benefit from those episodes, please share it with them, as well as any other business owners that you're networking with that could get value from the podcast or certain episodes. Please share those as well. Again, subscribe, make sure you're following any questions that you have, topics. We've had listeners reach out about certain guests that we should have on the show. Again, brad.l@aftconstruction.com. Email me for topics to address, guests that we should have on, and even if you think you'd be a great guest for the show. So again, thank you for all your support, and we'll see you next time.